Hi, this is Rahel, co-host of 2x2. A quick note before we get into today's episode. You might notice a few minor audio issues in this one. We've cleaned things up as much as possible in post, but there are a few moments where Rohin's mic is just a little bit glitchy. We hope it doesn't take away from the conversation, and thank you so much for bearing with us. If you're in your 20s or 30s in India right now, you're probably feeling a strange disconnect because, on one hand, you're reading headlines that tell you that India is booming, it's the next big thing, $1 trillion economy is on the horizon. But then you look at your own life, you hear about hiring freezes, you hear about salaries not getting better, you see friends with great degrees and practically everything going for them competing for pretty mediocre jobs. And basically, you start to think that the math is just not mathing. Here's what most people don't realize. Somewhere between those two realities that I just described, there is a very specific kind of person making some very specific, very high stakes decisions about where billions of dollars should go. Those decisions often play a big role in shaping whether you get hired, whether your company is able to raise capital, whether you will ever be able to reap the rewards of that bright, shiny India opportunity everyone seems to be talking about. Today, my co-host Rohin Dharmakumar and I are sitting down with one of those people. Meet Rohit Chopra. Hi Rohit, it's wonderful to have you on the show.
My pleasure. Happy to be here.
Now, for listeners, you may or may not have heard Rohit's name before, but let me tell you, for the last 2 decades, he's been deciding whether India and the companies in India deserve more money or less. He is a portfolio manager and analyst at Lazard Asset Management, which is one of the world's most prestigious independent investment banks. It manages roughly $260 to $270 billion globally, and a meaningful portion of that is in emerging markets, including India. Lazard has been deploying foreign capital in India for decades now, and Rohit plays a pretty important role there. Rohit, if you could very, very simply describe to our listeners what your area of expertise is.
Great. Well, thank you for having me today. It's a privilege to manage our clients' money. And what's exciting about what we do is we represent long-term money, fundamental money. So think about pension funds, state funds, endowments, sovereign capital. So we're very fundamental in what we do. And if we do our jobs well, our clients can retire with dignity. And what's really exciting about this career choice is that we represent this capital. We get the opportunity to deploy it. I focus specifically on global emerging markets, which has a vast geography. And what happens is that we are investing in companies through the public markets. So we tend to be a large FII here in India. If we do our jobs right and we're identifying the right businesses, what happens is that it also helps bring down the cost of capital here in India. And unlike a foreign direct investor who's building a road or building a factory, what we do is more invisible, right? So as capital comes into a country like India, what you find is that especially if it's long-term in nature, it can bring down that cost of capital. And as we know more broadly, as cost of capital comes down, you create a very significant inclusion in terms of the broader economy, how small businesses are able to
Sorry,
grow.
Rohit, can I just interrupt you because I have a slightly side question. Since you mentioned, you typically safeguard, invest long-term money, which is sovereign funds, pension funds, endowment funds, etc. And my connected question is, just a few days back, we were recording an episode on venture capital as an asset class. And a lot of venture capitalists also draw on these sources of capital. And there, we were discussing that whether they're doing justice to the returns, because if you see venture capital returns over typically a 10-year period, they haven't been very great. So the question that I want to ask you is that when Lazard invests in public markets and emerging markets, etc., globally for these kind of long-term sources of capital, do you have a timeline that you invest in? I mean, like, how does it, like, I get the part where you say that. So on one hand, I'm sort of seeing is that you're accessing capital which is long term in, let's say, the US, and you're deploying it in emerging markets. And if you do your job really efficiently, because it's long term capital on one hand, and on the other hand you're deploying it, you get cheaper access to capital when you deploy it, right? But what is this?
Yeah. What's exciting is that the markets are diverse, right? There's different opportunities and areas for specialization. When I say long-term capital and representing and investing for the long term, our capital can be perpetual, right? When you're investing in a venture fund, there tends to be a period where the venture strategy would need to monetize. What we find is that actually for many companies, the journey for their growth actually happens when they come to the public markets. Think about Google, right? Up until it went public, there was a nice investment return, but the ability and the real valuation growth has happened post market. So that comes then into how do you invest that capital? How do you identify these businesses? And we can get into that. But I think the journey actually into public markets and how that company continues to institutionalize itself can be a very fruitful experience for that long-term capital.
Got it. Oh, back to you. Sorry.
No, that's I thought we could take a second to talk about what we want this conversation to be. I think it'll also give our listeners a little bit of context. We want this to be an unfiltered AMA with you, right? As someone who's tracked the Indian economy and markets for like 2 decades now, we want to ask you the questions that's kind of on everyone's mind, right? Where is that money actually going? Which sectors, which companies, which bets are real? And what does all of that mean for someone, say, trying to build a career and wealth in India over the next decade? As someone who's turning 29 in exactly 1 week, I feel like these are things I am personally interested in. So I'm very excited to have this conversation. I'd love to start in the 90s, which is also when you started your journey with Lazard, if I'm not wrong.
That's right, late 90s.
In the late 90s?
Sure.
Can you tell me about your first major investment in India? Would you happen to remember?
We're here in Bangalore in the late 90s, 99. One of the exciting opportunities was that Infosys
I was just about
Just-
to. Was it Infosys?
listed on the NASDAQ at the time. It was the first major IT service company to list in the United States. I do remember that experience. I remember that during the dot-com euphoria, there was one day where Infosys' share price was up over $100 in a very short period of time. But, there was market volatility, but it was, I think, an important moment for India as well, where a major company is now listing on a major U.S. exchange. So I do remember that. And, as they
what
say,
journey since then
Yeah,
for
yeah.
Infosys, IT services. I just have a quick follow-up question, which is a counter question, which is, do you remember any bet that you made on an Indian back from the early 90s, which today people may have forgotten about because Infosys is a great example of something that really panned out, and how? Do you have any kind of memories of, narratives around sectors or companies from back then that didn't really pan out
Well,
the way?
let me say one of the things that I enjoy about investing is that every day is a learning experience. Okay.
So there are no
and
mistakes.
you need to
there are
have
things
humility.
to learn from.
No, you need to have humility. You have to learn and continue to iterate, but it's important to have frameworks. I think frameworks are really important because it helps you understand how do you bring in this information. What do I mean by we are fundamental investors, right? So what we're trying to do is identify businesses, right? What do they do? What is their financial returns? You're not buying India Inc. or Brazil Inc. And actually what happens, a lot of investors get into the challenge of saying, well, if GDP growth is X, that's going to translate into stock market returns. Actually, you find there's an inverse relationship.
How so?
because markets are a discounting mechanism of future expectations. And often, sometimes, like we saw in China, for example, when China was growing extremely fast, the growth itself did not translate into economic profits for businesses. And that was not necessarily a great experience for investors. Again, I'm talking more broadly here. So what we have sort of focused on at Lazard, and really Lazard's sort of investment beliefs go even prior to mine, going back 50 years, is this very simple context or concept. What are the fundamentals of a business? Think return on equity, which is sort of a measure of a company's um, profitability relative to the capital it's employing. Think about it in the context of the margin profile. How stable are those returns? What am I getting as an equity investor? And then the second part, which is I think often sometimes during the dot-com period, for example, where maybe the market's not as focused, is what am I actually paying for these businesses?
Do you get that sense right now in the market that we're in today? In India? I mean, of course, globally, yes,
So
but also
we
in
can
India.
talk about where does India fall within the
Yeah.
context of valuation. And yes, you're right. Valuations in India tend to be higher than other parts of the broader emerging market landscape. But there are reasons for it. But it's sort of that natural trade-off, right? And I think what we have focused on and kind of in terms of our framework is really two types of businesses. Ones that I would describe as compounders, right? These are companies that tend to have a durable competitive advantage. There's a real moat, maybe a wide moat as well, and the understanding of how is that changing from a competitive landscape. At the same time, the second thing is understanding the demand dynamic. We believe, and I think this has been pretty consistent across the global emerging markets, is that the demand dynamic is often over discounted by the market, meaning that demand is not an issue. That these companies that are able to achieve scale, that are able to compound, they're able to sustain that profitability for a lot longer than the market discounts. And that actually is a very exciting sort of journey, right? And you can argue some of the IT service companies in India became compounding businesses. Now, the other type of businesses that we tend to find are what we describe as mispricing. So these are companies where the market multiple, in our opinion, is wrong or incorrect for the level of profitability. So we're not buying cheap companies that have no profitability, but we're saying the market discount or the valuation the market is applying for these companies is incorrect because these businesses the fade rate of their profitability is being over discounted. And we do find some areas here in India as well, which fall within that mispricing.
What might those? I know you've said that you don't want to get too specific about companies, but in both of these categories that you mentioned, the compounders as well as in the mispriced sector, what can you tell us? Either sectors or whatever you can tell us, so that people are able to understand. Oh, that's what you're referring to.
I think in the mispricings area, I would say that there's two sort of debates out there, two broad sectors that in today's current market environment. One, which is the IT services industry itself, right? Share prices have had a pretty challenging period recently. So there's a question about the long term, the impact of AI. How do these business models have to shift? And they have seen a very significant multiple derating. I would describe those as some mispricings, right? Now, individual companies
In the
have
sense that you're saying it's probably overcorrecting, or people are.
well, I think there's opportunities for some mispricings here where the market may be over discounting the magnitude of disruption. I still think that these companies have a very powerful business model. I think they will be integral in terms of how AI is adopted more broadly across enterprises amongst their customers. But there is going to be a mix shift. And the question that we have to figure out, and what my team is working on, is trying to understand whether that is leading to a fundamental mispricing, meaning that is there a nice risk reward that exists in those areas. Another area I would say today that I believe is offering some mispricings more broadly in the India context is in some of the financial sector, right? So we've seen GDP growth in India, expectations that have come down. I think the RBI has been very accommodative. You've seen, let's say, sentiment has been a little bit weaker than 18 months ago. Valuations have come down. I think there's some mispricing opportunities within that. What I'd say more broadly, and I think this is kind of maybe help kind of contextualize this concept of emerging markets, right? India is just a subset of that. Our investments are driven by companies. And what's exciting is that I think the emerging markets landscape has dramatically changed, right? So going back to the late 90s, early 2000s, um, at that time, you could make the argument that emerging markets were more of a monolithic story, right? These were countries that believed in self-sufficiency, that were closed for capital, um, that just began to kind of reopen, join the global community. At that time, if I was in Brazil, India, China, you pretty much see the same cast of businesses, right? You'd find a few banks, a consumer company, a cement business, a telecom, and it was pretty consistent across the EM landscape. At the same time, what was also happening is that China was joining the World Trade Organization. When China joins the World Trade Organization, that led to this tremendous um, demand dynamic at the US consumer, right? US consumer buys Chinese goods, China manufactures these goods. They need to build industrial complex. That industrial complex helps drive the commodity complex. And at that time, you could see in emerging markets that was in a synchronized sort of cycle. Now, that helped carry this asset class. And then we had, let's say, the after the taper tantrum period in the U.S., which is back in 2013, where markets went through a more challenging period. I actually would argue that was really an important moment for emerging markets because it was less about this monolithic story, but more about the idiosyncratic. And what is exciting to me is that I believe that emerging market mandates still make a lot of sense, but it's more of a risk reward opportunity. It's actually the diversification benefits that you're seeing. And what does that mean? Stories or opportunities are quite different. Brazil, for example, has not seen a credit cycle. Interest rates in Brazil are over 15%. So if you're a local investor in Brazil, a lot of that capital is just going straight to own government bonds. So there has been no credit cycle. You go to Korea today, you guys are probably hearing a lot about AI and investment. There's also a corporate governance opportunity in terms of value up that's occurring. And we could go through to some details about this. The Middle East is going through a pretty important change. But I think what's important is to help understand where we are in India in that context. So let's spend some time kind of like, what do we see and how is India investments are shifting?
Sorry, before you get into that, the context is, I mean, over the last, let's say, 6 months or a year even or so, India has not seen the sort of, even as many of the other emerging markets have seen increased inflows, stock market returns going up, India has not seen. In fact, FII investments into India have been declining because there have been net outflows
Correct.
for a while now. That, of course, has been filled in by domestic investors, etc. But that's a separate matter. So the context to which when you start talking about India, and this is why it's really useful to have this conversation with you, is because, like you rightly said, you're sitting there and you're observing all of these countries around the world. It's not just India. So it's India relative to all these other places. So what's happening right now, which is essentially, even as other emerging markets are rising, even as a lot of people are trying to figure out how do we hedge against what's happening in the US, India, for some reason, is not part of that wave, and it's sort of decoupled from some of the other emerging markets.
Well, first of all, I think there is there are some reasons shorter term why that's happened. But you bring up, Rohin, you bring a great point, which is that there's this global competition for capital, right? And capital goes where it sees the best risk reward. India was a darling over the last decade, right? I mean, you actually found that India was growing, pretty from an economic sort of market return point of view, one of the stars across the emerging landscape. More recently, yes, it has underperformed. I think it's a couple of things. Some of it was the adjustment towards economic growth in India. There was concerns around the tariff negotiations. And at the same time, what was happening in other parts of the world? that maybe were starting to offer, at that time at least, an interesting risk reward. You had, first of all, dollar strength, which is a major headwind to global growth, which also made it harder for high carry countries to do well. So countries where interest rates locally are very high, so you could borrow in hard currency, invest in the local
That
market.
would be the opposite of what Japan is. Japan is
Yeah,
virtually a zero.
Yeah, so
I
you
mean,
would
now it's
fund
changing.
in
Got it.
Japan, but it is essentially countries that were more vulnerable or have higher exposure or higher carry. So essentially meaning that the headwind of strong dollar becomes more of a tailwind. You get the benefit of a nicer, a pretty healthy risk reward. So I think that helped some of the higher carry countries. At the same time, valuation points were quite different. I mean, Brazil, we found companies there where the PE multiple was actually lower than the dividend yield of companies. So there you
What
can.
does that mean to a layperson?
So that means that a price to earnings ratio is was lower than the return of capital that management would give you on a given year. So the yield that you're getting in some cases were so
So
attractive.
the PE multiple is
Were
not
so
even
low.
capturing the actual yield that you're.
So you were
Got it.
seeing,
Got it.
and then so I mean, I think that definitely. So there was an interesting risk reward opportunity, albeit economic growth in Brazil is meaningfully less than here in India. I also think that understanding kind of India in the context of capital that flows into broader Asia, right? So you had this period where I think money came into India when China was going through a more difficult period, right? So China, you saw a pretty significant correction in the housing market. Fixed asset investments slowed. Um, there was a challenge amongst the leading private sector companies and their relationship with the state, which led to some governance concerns. I think you guys are all familiar with some of the crackdowns that happened on that front. So that capital actually came to India when that was going on, and then things started to look more visible, or visibility improved. There seemed to be a closer understanding between the government and the private sector in China as an important driver of economic growth. I think also some of these leading platform companies are important aspect of how AI evolves and some of the new industries that have occurred. So that capital, I think, started to leave India, relatively speaking, and started to see some interesting risk rewards. So, for example, in China today, you've seen a lot of excitement around the DeepSeek moment that has led to adoption of AI. You're seeing that with certain companies in terms of productivity lift. What China is doing in EV manufacturing, this electric vehicle manufacturer is incredible. Seeing like sitting here in Bangalore, you see you guys on the streets, you see a lot of BYD
BYDs,
vehicles. I mean, in China today, over 50% of all new car sales are electric vehicles. The other thing that's happening is the investment that they're making in battery technologies, energy storage systems. So these were areas where investors were seeing some opportunities. I think the other area that capital started to see an opportunity was within the broader capex investment that's happening in AI globally, right? So the hyperscalers are investing very significantly. The supply chains in places like Taiwan, Korea, China, particularly in this area, are key drivers. I mean, we say that in emerging markets, there's no AI without the emerging markets, and these are companies in Taiwan, for example, one of the leading companies there.
So, what does that phrase mean? In emerging markets, there is no.
No, so there's no AI without emerging markets.
In the sense of
That
what
you
usage
need
or?
EM
Ah,
to drive this capex development, right? Companies out of Taiwan, Korea,
got it.
are keep
So that's just correcting the notion that you think that, look, the US alone
no,
can pull off, or China alone
well,
can. Got it.
but the supply chains that have been built out in Asia are key components into driving your NVIDIA chips. I mean, Taiwan Semiconductor Manufacturing is a well-known company. Some of the memory industry today is a relatively consolidated industry. You've got three global players, two of which are based in Korea. So what happens, and these were companies that were trading at very, let's call them attractive valuations. And I think that, so there was an aspect of the risk reward. And this is all happening during a time where, at least in the India context, growth was slowing, expectations were. So I think that's one of the reasons that some of that capital has left India.
I just want to make the point that I don't think enough people realize this, because when people enough of us Indians sitting in India don't realize that, is, it's that cliche of it's not you, it's me sort of thing. So it's like this point that you mentioned about capital leaving for China, but it's capital is going to another place where there is a better return available. It's not necessarily always an absolute decision on India. It's always a relative decision. And I don't think enough of us realize that just like India got a bunch of capital when people decided that, look, it's too risky or there's not enough rewards in China, the reverse also happens. And it's not just China, like you said, so many other emerging markets as well.
But it's also interesting that, I think we came across an interview that you did recently where you said the long-term opportunity is still there in India. And very often you read those statements, but you don't really understand what that long-term opportunity is. Because we don't see like exciting stuff like that. We're not hearing about that happening here as much. So what is that opportunity in?
Okay. So I think what's exciting, I think what we've kind of started to discover is that India is part of a global economy. And that means more than just sort of supply chain exporters, but there's also this constant tension for capital and capital finding where's the best risk reward, right? And that thing is really, I think that's really healthy. I actually think that even what has happened here more shorter term has been very good for India.
Because it puts pressure on
of course, because
so you up their game.
Well, it helps drive a multi-stakeholder shift in judgment, like whether that be development of manufacturing here, opening up a regulation, some of the reforms. This is, I think, part of that broader equation. I think one of the things that, as a global emerging market investor, I believe that the emerging world is not a convergence story. And I want to kind of unpack that a bit. What you find around the world, irrespective of social and political differences, that we as humans fit within Maslow's hierarchy of needs, right? Our natural needs and wants are common around the world. And I think that's an important context. I also believe that we should be looking at the world in emerging markets within that lens, right? So there's like this sort of context of foundational development. So when I started investing in India, right, it was about the roads, the banks, the telecoms, the basic foundations of a modern economy. That then led to e-commerce. That led to a lot of the AI, the AI, the technology companies that are evolving. That leads to the investments that we're seeing in more intangible asset businesses. So this context is quite helpful. And I think what happens is that it's incorrect today to look at a Korean bank and try to compare it with an Indian financial. They're totally different in terms of where they are in their journey. You'll find companies that are going to be able to leapfrog that experience. They're not going to follow what's happening in the developed markets. I think a case in point, I used to be a telecom analyst, spent a lot of time. What you found is that in emerging markets, telecom fixed line penetration kind of stopped at 10%, and then it went straight to cell phone penetration. And as I say, the rest is history. But the point being is that the natural tendency of us as humans is constant but the journey for how countries are going to be able to meet that need, and then importantly, where these countries are in that context is quite important. For example, here in India, you have one of the most exciting demographic trends, right? The dependency ratios are amongst the highest or the best in the world, where essentially you have a young population, right? And it's a very different equation than even a place like China is facing, right? China is now seeing a slowdown in terms of the birth rates, and actually has negative population growth. By the end of the century, the population is anticipated to be between 600 and 700 million people from about 1.4 billion. So, I'm just saying that it's important to contextualize it where these countries are in their journey. And importantly, this concept of, EM as a monolithic asset class, I think is quite the contrary. I think it's very diverse. We know that even in India, right? There's no one India. I mean, I had
That's true.
I spent
Many
a lot.
Indias is the
Yeah, and in different languages, different areas of development, and I think as an investor, it's understanding those tea leaves, understanding some of those nuances where you're able to find, I think, the best risk reward.
You mentioned South Korea in your when you were mentioning, and I was going back to the comparisons between South Korea and India. You've been investing in South Korea also for a while, and in India for a while. One of the the major components of South Korea's rise from being a developing country to a fairly advanced country was the role played by large private sector companies, which was closely aligned to the state chaebols. I don't know
Correct,
if I'm
chaebols.
pronouncing it right, which is Hyundai, Hynix, all of these companies, etc. Samsung, was Samsung a chaebol as well?
Yeah,
It is,
yeah.
absolutely, right? There is this. So, as the economic theory goes, a lot of the innovation, risk taking, ambition, etc., were born by these large companies, of course, with state support. And over the decades, they've built truly world class businesses, supply chains, products, etc., and become successful. Now, there is a strain of critique of the Indian private sector, which increasingly has been coming from the very Indian government itself, and from the finance ministry, and from various other things, saying that Indian businesses are not taking enough risks. They have to understand that, look, just like you said, that there is nothing called India Inc. It's not the responsibility of the Indian government to do something about it. It really comes down to Indian companies. There is now this, on one hand, it's a criticism that large Indian businesses with strong balance sheets and brands can do much more to take risks and think about the next 10 years or 20 years, right? At the same time, there is also this, do we really want to go down that path where the state aligns with private companies? Because obviously, like, there are issues with that when that happens. But I wanted you to sort of compare that with what happened in South Korea. Because if someone tells me today that, do you know that Samsung, and if you ask someone about what do you think about Samsung, they're like, wow, what a fantastic company. And then you tell them, do you know the history of Samsung and how they rose? So how do you see
So,
these
Rohan, I think
similarities?
you help eliminate the aspect of every country. The journey can be different, right? And one of the things that I would highlight is the Professor Hausman at the Kennedy School back in the States has done a lot of really interesting work around Hausman, Hou. What he's highlighted is that historically there's been this view that if you are blessed with a natural resource, you should continue to process that and refine and vertically integrate it. What the theory actually says is, let's try to understand a country around its competitiveness. Let's look at its export basket. Let's try to understand how can it evolve its goods, its services. How can it evolve its overall economy? So if you go back 50 years ago, a long time ago, you would actually find that Argentina had a higher per capita income than South Korea. Okay. At the time, Argentina was involved in soft commodities, exportation, and it's kind of consistently been in that sort of framework. While Korea which was doing basic textiles, basic chemicals, somehow was able to move that bridge to become more involved in more advanced manufacturing. And I think what you found there is that it's not just one thing. It becomes a multi stakeholder participation, right? So at that time, there was technology, IP that was brought in. There was actually a lot of closeness with Japan and the U.S. in terms of some of that know-how, how capital was going into these areas. Education levels significantly improved, and then fast forward 50 years from later. South Korea is, as a nation, is powering AI, is powering the fourth industrialization. So when you think about it in that context, and let's kind of bring it back to India, what's exciting about India is that India actually, from an economic complexity point of view, is relatively complex. And it's definitely more complex than its per capita incomes are highlighting on a broader scale. And the question then is, so why is it not sort of driving economic growth? And I think there are a couple of factors that need to be brought into play. So you highlighted the role of the private sector, right? I think it's been well documented that in the private sector here in India, broadly speaking, R&D spend as a percentage of GDP is on the lower side, right?
To put it mildly.
Managements have been critiqued for returning capital back to shareholders and not investing. And I think I, as an investor, also deserve some of that blame, because I would sit down and say, "What's your capital return policy?" And maybe there has been a period where there's been underinvestment. I think the government has seen this. So I think it's important to highlight that over the last few years, public sector capex has significantly supported the economy, right? And what's exciting about it is, as a child coming to India, the roads, the airports were in abysmal condition. Today, we have so many airports that are opening up. Roads are obviously improving. Metros are happening. So the role of government and understanding how to do that sort of at scale is at play, right? And I think that's a really exciting thing, because then that also opens up the system. It helps improve efficiency in the economy, helps improve logistics. I also think that some of the incentives that have come through means, and then also the geopolitical areas, especially post-COVID, the importance of having domestic supply chains is an area where the private sector is going to play a very important role. So I think every country's journey is going to be slightly different. I'm excited about that in the case of India. I think the demand dynamic is still underappreciated. Look at what you're seeing in terms of the travel industry. We're still very early in manufacturing. I mean, the defense sector is likely to see a lot of opportunities. So, these are all iterative experiences. I do think that what's exciting about this country is the youth, the private sector engagement, the path that countries are able to, once you cross around $3,000 per capita, the path to, high sort of single digit, thousands of dollars per income is pretty much short. What you tend to find is that countries then fall into what is called the middle income trap, right? Which is around the $10,000 to $12,000 level. And Korea, Taiwan are, I think, prime examples of countries that have been able to shoot through that. And that became a function of investment, knowledge, education, and risk-taking.
Now, all of these arguments around the middle income trap, $3,000, $10,000, etc., I would say that there is a pre-AI, logic era, and increasingly it looks like there is a post-AI logic era where we just sort of can't seem to see how everything that we assumed in terms of how jobs grow, white collar jobs, knowledge sector, etc., cannot probably be extrapolated even with a discounting factor over the next 10 years, 20 years. How do you see that? And you also earlier talked about, IT services, which is just one of the many sectors that have been seeing the entire SaaS space has been seeing an aggressive sell-off over the last week or two. Legal software, creative software. So, and of course, connected to all of this is the fact that, I mean, on one hand, there is a argument which I now mostly believe that, look, I mean, these LLMs can progressively, they're getting better much faster, and therefore they can do a lot more knowledge work much faster than you think. There is this argument that there is a atoms versus electrons play. You look, I mean, whatever happens in the real world will probably not be disrupted, but to that you have robotics and the progress that China is making on that front as well. So when you bring sort of all of this together and AI into 2026, and then you look at, and again, I want to restrict you to India. How do you sort of see this? Because India, in some senses, isn't on the AI landscape. Next week, we have a AI summit. Honestly, I don't expect anything significant to come out because innovation AI doesn't come out of summits and partnerships, comes out of real labs. So India is not on the AI landscape. And like you rightly said, India also has this massive demographic dividend, which a lot of people also worried could turn into a demographic disaster if you don't harness it and provide enough jobs. So as an external investor who looks at, the macroeconomic forces at play, how do you sort of reconcile all of these sort of strands, not converging, but all playing out all at the same time?
Well, there's a lot there to unpack, and there's a lot to keep everyone up at night, which is happening. Uh, the constant is change. Um, there are real risks, right? I mean, I think as a whole, uh, if you look at the IT service industry, in some ways we are helping uh, the integration of AI more broadly, but at the same time, we haven't seen that type of breakthrough here in India, right? I mean, we're not there yet, right? And I do think that that could potentially be quite disruptive, particularly when you have this younger population that's well educated trying to start their careers. So yes, at the same time, I do think that the aspect here is that the AI can be very helpful. I think you'll see more investment in manufacturing. Um, I think there's definitely at least the one advantage that India has is you have a sizable domestic economy. You have a sizable domestic economy that can help support the natural demand dynamic that exists. Um, I don't think that the adoption here is as advanced as we've seen elsewhere. I think it can help companies become more competitive. I think you're seeing that with some logistics businesses. You see that with the consumer, right? Like the benefits that we're seeing with quick commerce, where we're seeing with the connectivity with tier 3, tier 4 cities, thanks to AI and technology, I think is quite helpful. But I do agree. I think there's likely to be disruption. I think particularly in BPO areas or business process outsourcing. Tasks that can be easily automated. Yeah, of course, that's definitely gonna play a role. But at the same time, I do think that at least here in India, there's enough areas in terms of development that needs to happen that there's still more of a broader demand dynamic. I think in some of the Western countries, you're gonna potentially see basic universal income as a way to help adjust for the potential disruption. I think you may even find the question of what is work. The concept of work is going to evolve.
I'm actually glad you said that, because I want to, if a 20-something-year-old came up to you today and said, Rohit, can you tell me where there is real opportunity? I'm trying to figure out what is the opportunity? What's the type of company? What are the sectors that they should be looking at?
I will tell you, I am so excited about what I'm seeing here in India. Like, it's no longer just access to capital, build a road, build a logistics network that would kind of drive whether you're going to be able to grow your business. Indian entrepreneurs, the youth here, are so innovative across sectors. They're finding ways to take advantage of the basic foundations that have been built over the last decade or so, done by the private sector, done with the public sector, I think that this is a tremendous opportunity for innovation. And culturally, what also I find very exciting is that when I meet with the entrepreneurs here, they have a much more self-awareness about their role in the broader societal challenges. They seem quite focused on equitable growth. I mean, we're seeing that in terms of some of the foundations that the younger generations are bringing to. So I'm excited. I think that you're going to see a lot of new innovations. We're seeing that in really many sectors, from services, hospitality. I think we're going to start to see some really interesting areas in the manufacturing space as well as incentives come through. So, um, the exciting thing here is that here in India, you're in a fast moving river. Uh, Change is obviously the constant, but the exciting thing also is that because it's not an easy place to do business per se, those that are innovative, that can understand the system, they're able to build businesses that are actually going to be able to sustain themselves for a lot longer.
Got it. I have another follow-up question, which is, I mean, India is a market again, and I think if you've just, let's restrict our horizon to the last 12 months. If you look at the last 12 months from the outside, I mean, FI outflows have been negative. They've been largely taking out money. But if you kind of look from the inside, there's been an IPO boom. People are putting more and money into stock markets. Domestic investors are pumping. So there's almost seems to be like, I mean, there are two narratives that are playing out. Now, how do you see this when you look from the outside, from a distance at India, and say, look at this market, like, look at the amount of IPOs that are happening, look at the amount of IPOs that are yet to happen, look at the amount of money that's going to stock markets from what's going on here, and why? So how do you reconcile the two?
Yeah. So what's exciting is that if you think about sort of the evolution of the Indian stock market, right? It's a very old market. You have a deep market here. I think that when Reliance listed, it actually helped drive. At that time, it was a big, meaningful aspect of driving the participation of the common person more broadly around participation in the market. Fast forward to today, you are seeing systematic investments done by domestics, right? Individuals, uh, part of the financial inclusion thesis that you're seeing here more broadly in India. This is leading to wealth creation. India is one of the markets, really, I think one of the key standout markets where active management has done quite well. It's done well relative to some of the passive vehicles. So there's an opportunity for active.
By that, you mean that people who are, I mean, investors or funds that are actively buying and selling stocks rather than just tracking the index.
Correct.
By and
Correct.
large. Because
By and large,
globally,
yes, that's right.
the tide is absolutely like in the, passive, where you just put money into an index fund that just mirrors the index and charges very low fees.
I believe it's quite challenging to be a developed market portfolio manager investing just purely in U.S. stocks. I mean, that's why I chose to do emerging markets, because I do think there's information asymmetry. It's the ability to connect those dots. And I think here in India, you're seeing that quite acutely. And I also think what's important, why that's the case, it goes back to the context of the development that's happening. So India historically, it was quite a concentrated market. It was some very large cap companies in the financial sector, in some of the energy intensive sectors. And as India now has kind of built that foundation, what's exciting is the unlocking of capital that's going to go into what I think would describe as sort of the mid cap area, where you have, and these are not small companies, these are sizable companies that have small weightings in these benchmarks, but where the capital and the growth is likely to occur. So in the context of a investor participation, I think there's a lot of alpha opportunity here more locally in India. And I think what worked last decade is not what's going to work next decade.
Great. That actually was my next question. Actually, it's my final question, which is, when you look at the next 10 years in India, the next decade, you spoke about frameworks earlier, or narratives, whatever you want to call it, right? what I'm not going to ask you to name companies, but what would you say are your top 3 or 4 narratives or frameworks to look at what wins or who wins, or which are going to be some of the best risk reward, like, narratives for India?
I think traditional B2C businesses are going to see more and more competition. I think they're generally going to see their margins under pressure, because I believe that you're going to see, for a lot of those companies, the moat used to be your distribution network. I think that there's less of it of the differentiation. Now it's going to be around brand equity. It's going to be
Consumer
yeah.
foods, FMCG.
Yeah, so some of the traditional FMCG areas, I think they're going to see a lot more competition from local brands, and local national champions are going to emerge. And there's important themes around that in terms of natural products, India centric products, which potentially could lead to, I think, opportunities for more an export context. And those were stocks that were quite attractive, the traditional ones historically. I do think there's going to be more dynamic there. I also believe that the consumer, and this is not rocket science, but everyone sees it. I mean, just see the roads, go to the airports, travel experiences, hospitality. I mean, the Indian hospitality industry, I think, is still so early. India does service extremely well. I think it's going to attract foreign visitations.
Yeah, I
I
mean,
think
in fact, if I'm not mistaken, I just read a few days ago that we actually got fewer visitors, foreign tourists to India last year than we did the year before. Right. So forget everything else. I mean, of course, that number itself is abysmally low, but it was lower than what it was in 2024 as well.
But Rohin, today, try to get a room in Delhi or in Bangalore, very difficult, right? So there's pricing power there. I think the other aspect of connecting what I think you guys call Bharat, right? There's the India that we know in the metros, but connecting Bharat is a tremendous opportunity. And that's everything from electrification to logistics to consumer products. I think that aspect of bringing the masses online, I think, is an exciting opportunity. The last thing I would say here is sort of the B2B opportunity, business to business opportunity. That's in terms of skill upgradation, manufacturing in key sectors, the backward integration of that, creation of supply chains. I think India has made tremendous progress, and we talk about some of the iPhones and the assemblies that are happening, but that's going to start to lead to even further supply chain manufacturing that's happening locally. I do think that this is important in the context of global geopolitical context, that India labor arbitrage still exists. It's quite compelling, but also as countries look more broadly for dual supply chains, this is a tremendous opportunity for India. I think the developments in terms of some of these trade deals will help that. And then I think here the key thing is, when you're investing in India, and I tell this to our clients, don't invest it for the next 1-2 years, right? This is an investment you should be making for your grandkids. The wealth creation, the journey that we're going to see from this economy that's $3 trillion today to 6 trillion over the next 10 years, and so on. I still think that we're still very early in that economic development, and that journey is where investors are going to reap the benefits, and identifying the businesses that are able to capitalize on that opportunity at reasonable valuations.
Interesting. Before I turn it over to my late millennial co-host Rahel for her last question, you said something which is very evocative, right? If you're investing in India, invest it for your grandkids. I'm just sort of thinking that the traditional vehicle where people would do that was real estate, right? Where you say, I mean, and that's one of the, I think, not talking points, but I think one of the crises facing Gen Z, where, I mean, can they even afford homes any longer? And the boomers and the Gen Xers bought the homes which are appreciating. So would your advice today be that if you want to leave something for your grandkids, don't buy a home, invest in India as an emerging market, and forget about it for the next 20 years, because it's definitely going to return much more. I know it's a little bit of a
I think you're good. You bring up a very interesting observation, which is, it's easy to say about, I bought this property or I bought this apartment and it's gone up X amount. The fact is, that when you buy property, what's happened is that you don't have the ability to flip it, right? And it actually is a high friction item. The fact is that the property market in India has not done as well as the stock market. The challenge is that in the market, you have daily liquidity. And when you allow emotion to come into your judgment, you often make decisions at the wrong time. You sell when it's bottom. Like, to me, why am I in India twice in the last few months is that India has underperformed by 30% more broadly across EM. This is a time where investors should be focusing on identifying those businesses. This is an opportunity to be looking for those fat pitches. And I think the journey of what the stock market and the wealth creation that we're going to see for the long-term holder is, I think, India stands out from a risk reward context.
In fact, you've been here for about a week now. I'd love to hear highlights. I know you've been speaking to a lot of founders, meeting up with a lot of people. Anything exciting that that you've kind of come across?
I think the most important observation is that there's no one India. I've had the privilege of meeting entrepreneurs over the age of 80 to entrepreneurs that are today in their mid-20s that are growing and developing tremendous businesses. All of which are quite compelling. The energy that you have here in India is really special. You can feel it on the ground. The youth is excited.
We're recording this in Bangalore. You can also feel the traffic energy on the ground in Bangalore.
And it's getting better. It'll get better, right? But that's a very different dynamic than what you find in other parts of the world. Growth solves a lot of problems. And I think here in India, we have such foundational opportunities to solve for growth that visibility of that growth will continue to attract capital. I think will continue to drive entrepreneurialism. And I think for long-term investors, this is one of the key areas of a bright spot in the global macro environment.
Thank you so much.
Thank you, Rohit, for such a wonderful chat.
Thank you. Thanks for the opportunity.
I hope you keep coming back to India more often.
Thank you for listening to this episode of 2x2. This episode was produced by Uddantika Kashyap and mixed by resident sound engineer Rajiv CN. If you feel there's something we've missed out in this discussion or feel some numbers or facts don't add up, you can write to us at 2bytwo@theken.com. And if you're listening to this episode on Apple Podcasts, please show us some love by leaving us a rating. Lastly, if you love the episode, share it with people, your friends, family, or colleagues who might find it insightful as well. We'll be back next week with an exciting discussion and a 2x2 for you to think about.